This just in, the House just approved the most recent spending plan, which may ease the risk of a government shutdown, at least for now. But are we done yet? And what is this going to mean for next year? We've got a lot to break down coming out of the Beltway, all for you right now on UBS Trending. Hello, everybody, and welcome to UBS Trending. I'm Anthony Pastore, and I am very excited to be here with my friend and colleague, Libby Cantrell from PIMCO. Libby, it's so good to always have you in the studio.
Good to be here.
I say always. I feel like it should be more often.
It should be more often,
but it's
right?
great to see
We're
you.
right around the corner, and wonderful to be here.
You've been busy. You're always busy, but particularly this time of year, we're talking about government shutdowns now that we've averted that for the moment, but we're in the process of an election year cycle. There's so much happening, but I want to start with the shutdown with you. The bill passed the House, and it looks like Speaker Johnson had to make some concessions. Some of the people on the far right of his party were not so happy with what he did, but he did have to kind of shake hands with some Democrats. What'd you see? What's going on there?
Yes. So as a reminder, this has to do with funding the government. This is not about the debt ceiling, which was much more existential for the markets. This is just about sort of the annual ritual of funding the government. But of course, if you go back to the September 30th deadline, that's the October 1st is the beginning of the fiscal year for the government. Speaker McCarthy got ousted for doing exactly what Speaker Johnson is doing right now, which is just passing what's called a short-term continuing resolution, basically a stopgap funding bill at 2023 levels. But again, McCarthy got ousted for doing the same thing. You fast forward to the deadline, which is actually on Friday. Johnson just has put exactly what McCarthy did in motion. As you said, it passed the House. We expect it to pass the Senate with big bipartisan vote and then be signed into law. However, Anthony, this is unfortunately not the ending of this saga. We basically, in sort of as Congress is wont to do, we're just really kicking the can down the road.
Right.
And now there are two deadlines, which is just leave it to Congress to complicate everything. For part of the government funding will expire January 19th. The other part will be on February 2nd, ironically Groundhog Day.
Yeah.
So we will
Or maybe not so ironically.
Basically, yes, or yeah, maybe intentionally. We're going to be revisiting this, come early winter and early 2024. And I do think that from a market's perspective, the market. Speaker Johnson said yesterday that this is the last continuing resolution. This is the last stopgap bill that they will pass, and that means that just puts pressure on Congress to pass these 12 appropriations bills, which may seem straightforward, but it really isn't, especially in a split controlled Congress. So I think bottom line here is we have averted a shutdown for Thanksgiving, fortunately. So all of you who are traveling, your TSA folks will be happy because they're still getting paid. But we basically have just kicked the can down to early 2024.
Does it look like Johnson's going to hold on to his gavel for the moment?
I think for now he will. Folks in the House Freedom Caucus, the right flank, is sort of giving him the benefit of the doubt,
right.
Although with a warning, with a caveat, that's saying you can't do this again. So that's why I do think the stakes are going to be higher come that January 19th deadline.
Yeah, it wouldn't be something we'd be surprised about if they tried to oust out another speaker. It just seems like government is just having a free-for-all these days, at least to the person like me who's sitting in the public perception of what's going on in D.C. And obviously you know a lot more being you're connecting with.
It's even worse, actually, as you get closer to it. So I think there's some benefit to being a little bit, yes.
Exactly. But what do you think, Libby, the priorities of Democrats are and the priorities of Republicans? Obviously, it's an election year that we're just about to get into, so there's a lot at stake.
Yeah, so I would say unlike the last session of Congress where we saw a lot of bipartisanship, actually, ironically, for all the polarization, we did see folks come together around the bipartisan infrastructure bill, for instance, around the CHIPS Act. I don't think we're going to see any sort of big landmark bipartisan legislation over the next year. I mean, honestly, if Congress can even come together to do the basic task of funding the government, kind of the most fundamental thing that they can do, kind of table stakes, if you will, I think our expectations should be low for anything, big from a bipartisan perspective. Now, in terms of kind of the areas of agreement, though, where you might be able to see something if you kind of squint very hard, Crypto, there is some desire to get something done on crypto. Right now, the SEC and the CFTC are kind of having a turf battle over jurisdiction. That's something Congress could actually clarify. Energy permitting reform, that's really important for folks who are in the fossil fuel business, but also in the renewable business, to just expedite some of the energy permitting at the federal level. So there are areas of commonality. And actually, I will say that as you get closer, there is probably more bipartisanship than you might see on Twitter. But I do think there are expectations for anything really happening. And I will say, just from an economic perspective, if the economy slows into 2024, we should not expect Congress to be kind of the fiscal put, if you will. I think the threshold for any more real kind of stimulus to sort of save the economy, like we saw during COVID, is going to be incredibly high. And as a result, we really shouldn't expect anything, even if the economy slows.
Right, and we're going to talk about the Fed in a minute, but it feels like they're going to allow the Fed to do their job and let the economy play itself out a little bit. But I'm jumping ahead, but I want to ask you, of course, about the election. We know right now that the biggest leaders, Biden's leading on the Democratic side right now, and Trump is still the favorite on the Republican side. What does the next couple of months look like as we start to whittle down some of the major players?
Yeah, so despite the polling and some of the hand-wringing on Twitter and what have you, President Biden will be the nominee outside of some extraordinary health issue, which of course is not necessarily improbable just because of his advanced age. But he will be the nominee. Somebody said, some senator mentioned, who knows Biden well, said if he's breathing, he's running. So that should be the expectation. And we were just talking about this off camera. There is no great cabal trying to get Newsom in there or Michelle Obama. Honestly, the Democratic Party is just not that organized. But also, President Biden really thinks that he can and should run and that he will win. So that is from Biden world. There's a lot of confidence there. Now, whether that's, we'll see. We'll see, how that plays out. On the Republican side, it is still an open question. Now, as you said, President Trump is the clear front runner. I think if the primaries were held tomorrow, he would absolutely be the nominee. They're not going to be held tomorrow. We still have one more debate. Iowa is January 15th, followed by New Hampshire, Nevada and South Carolina. I'd say if sort of for folks who are listening to this, if President Trump wins those first 4 contests, he will be the nominee. It is very difficult to imagine a scenario where he goes into Super Tuesday on March 5th, winning all those contests and not becoming the nominee.
Right.
However, if somebody starts getting traction, say in Iowa or New Hampshire, say Nikki Haley does well in New Hampshire, outperforms expectations, then I think you could see the race quickly consolidate to a 2-person race. And then I think it does become an open question. But clearly, if the primaries were held today, he would be the nominee. And ironically, as you mentioned, 70% of Americans don't want to see a replay of 2020. Like, we don't want to see this movie. We're fine
done it already.
We're fine with the first movie. We don't need to see the sequel. So it is sort of ironic that most Americans don't want to see the rematch, but yet that's what they may get.
That's right, because if you like you said, we can't always trust polling because it's been wrong in the past. But as of right now, the polls do show that is the matchup that we're going to be in for next year.
Yeah, exactly.
Interesting.
Yes.
So from an economic perspective, Libby, obviously the Fed has their work cut out for you, and PIMCO, you are really a primarily bond shop, so this really is your wheelhouse to play in. Inflation, with this, like you said, the latest CPI print maybe showed a little promise, but there's some other items that are embedded in there that maybe aren't quite as clear. So what do you see coming down the pike when it comes to the Fed?
I mean, I would just say, just generally, bonds are back for real this time. We kind of had a head fake at the beginning of 2023, but really we do think the Fed is either done or almost done. Yesterday's CPI print was very promising. Obviously, Treasuries rallied. The market started pricing in cuts for next year. I think we probably have a little bit of a disparate view. If you do look under the hood of that CPI print, there were some things. Service inflation was a little bit higher and seemed like it could be accelerating, and that it could be a problem for the Fed, meaning that they may have to go at least one more time. But regardless, Anthony, we think that the Fed is going to hold for now, to be in terms of being restrictive. We think this sort of restrictive monetary policy is going to be staying around for 2024. And as a result, I mean, again, from like an investor's perspective, it's a great time to get into the bond market, because if you don't think rates are going to necessarily be increasing all that much, you think that there's more, downside than upside in terms of rates coming down, it's a great time to be getting some really nice yield. We were talking about private credit. We all know the rage is around private credit. But on public credit, you can get 6, 7, 8, 9% yields, half the fees, and a lot more liquidity. So we think it's a good time, regardless of what happens with the Fed, whether they're done or near done. It's a nice time for fixed income, for sure.
Yeah, Libby, thank you so much. I wish we always have more time with you, but
it's great to be
great
here.
to have you by and get your perspective. There's a lot that we always need to digest when you come through, so good to see you.
Good to see you.
Thank you. Libby Cantrell from PIMCO. And thank you all for joining us. There's a lot more information on everything that Libby and I talked about on our Insights website at ubs.com/views. Plus, you can follow us on social media, our dedicated Instagram page at UBS Trending for all the studio's content that you're not going to find anywhere else. Plus, UBS is on all the other social channels like LinkedIn, Facebook, and X. In the meantime, if you have any questions about your portfolio, make sure you're talking to your financial advisor. And until next time, I'm Anthony Pastore. We hope you have a great day. And remember to keep your eyes on what's trending, everybody. We will see you soon.